Hello and welcome to Bazaar Morning Call. I am Prashant. With me, my colleagues Sonia and Nigel. Guys, hi. Good morning.
Morning.
We have a repeat of what we had day before yesterday in US markets, which is a slight downtick. May not mean much, like it did not mean much yesterday. The S&P is down 0.5%. The Nasdaq is down under 1%, but that's about it. I mean, we had a similar kind of session out of US the day before, and the market did what it did yesterday here, which is it posted a strong session. There is, of course, the Fed decision later today, I think, which will be the highlight. And then tomorrow morning, right out of the Fed decision, you have the RBI meeting. Of course, the understanding is that this is not a rate decision meeting. It largely is, about basically trying to explain why the RBI has not been able to get to its targeted inflation zone for many quarters in a row now. Just a piece of good news today for India. You had the PMI numbers come out during, of course, a trading time here, but we got PMI numbers for other Asian emerging markets as well. And, the difference is stark. India is doing better. October over September for India, PMI manufacturing numbers have improved as compared to emerging market, Asian markets, where, the PMI numbers on an average have fallen below 50, which is the fact that these are in contraction zone. So that's, I think, something worth highlighting. The momentum here is pretty strong. High-frequency data is indicating that. SGX, of course, is indicating a bit of a wait-and-watch because I think ahead of the Fed decision, it should be a wait-and-watch kind of a session. We've seen this movie before. Any substantial moves, perhaps, post the Fed decision and what they say. Guys, hi.
Hi, morning. And in that context, the Indian markets are unruffled, right, so far. I mean, it's a 10-month high that the market is sitting on. The uptrend is definitely intact. You can see it in the data. You can see it in the F&O positions, in the cash market volumes as well. And give and take everything, I mean, if you look at it, in the last 4 days, FIs have bought 11,200 crores in the cash markets. Yesterday, there was a buy figure once again of 2,600 crores. So the going is good. It's just a matter of time. Of course, you'll have to be perhaps a bit more patient before new highs are hit, but new highs will definitely come. Now, the Fed policy today is the big event to watch. There's a 75 basis points rate hike that has been priced in by the market. But more than that, any signal from the Fed on slowing down rate hikes going forward will be taken positively. So the commentary is more keenly watched. And I think that's something that global markets are pricing in as well. For our own markets, a lot of lead indicators are showcasing an improvement in the economy. Prashant was talking about the PMI data. I tracked the auto data very closely, and in that context, there were some super trends that we saw in the month of October. Record high tractor sales coming in for M&M. TVS Motors seeing a big surge in their, their iQube sales, which is their electric vehicle. Eicher Motors seeing record high Royal Enfield sales. The list is pretty long. Tata Motors seeing very good EV sales as well. So, these indicate that premiumization, of course, is the big story. But even in rural India, things are picking up. So that is a barometer of the economy picking up. But give and take everything, I guess the Fed event will be the big thing to watch.
Oh, absolutely. I mean, I think today it makes sense just to wait and see what they do rather than jump ahead of time. The market's done well here going into the Fed decision, like global markets have. And I think what you said, the fact that will the Fed indicate a downshift? 75 basis point today, of course, is a given. I mean, we'll get that. It's at least priced, and if you get 50, great. But if you get 75, it's not positive or negative. But what after November, which is today's meeting in December, is there a potential downshift? And if there is a potential downshift, which is that they say, well, it's not going to be 75 every time. We may decide to do 50 based on data. If they leave the door open, room open, the question really is how much is priced in. And I said this yesterday that the market's done well. The S&P, for example, is up 10% in the last 13 trading sessions. It's done a fair bit. Real yields are down in the US. The dollar has come off quite a bit. VIX has been falling for many sessions in a row. So all in all, I mean, financial conditions in the US have eased quite a bit with this rally that we've had. One view is that, we heard at the Jackson Hole Summit or the September policy, the Fed will want to err on the hawkish side. I mean, why should they sort of let their foot off the pedal now? Why not wait to see that inflation actually is coming off, there is slack in the economy and things like that before indicating anything conclusively? And I think that makes sense. So given the fact that the market has rallied and given the fact that the proclivity of the Fed has been to err on the side of the on the hawkish side, I think the market positioning out of the Fed maybe, I mean, the risk is skewed towards the hawkish side because of the rally and because of what the Fed has done in the past as well. So have that in mind as you trade. I mean, if you're a very near-term, short-term trader, I think these things become pretty important. We, of course, have the RBI meeting tomorrow. It'll be interesting to see what they say, what they have to say about inflation, whether additional measures are needed. I don't think this is a meeting, as has been widely discussed, about rates or having a rate decision. But that, again, is important. That's an MPC meeting tomorrow morning. Nifty momentum here remains pretty strong. There is absolutely no question about it. And I think, with data like what Sonia mentioned, the auto numbers, PMI numbers, high-frequency data still indicates that the economy is still in pretty good shape. So the momentum is strong, but there are these sort of things to navigate, the Fed and additional things that we've highlighted. Jobs report, for example, out of the US on Friday. So maybe keep an eye out on support levels as well. On the Nifty, support stand at about 17,965 and 17,858. This is on the downside. We got to 18,100. We got to almost 18,200 as well. And I think a move to 18,300 cannot be ruled out if, I mean, there is no reversal. Just watch out for FI long positioning as well. In index futures, FI long stand at about 45,000 contracts, a little over 45,000 contracts as of yesterday's close. At about 50,000, 55,000 long contracts, in the past, many occasions, the Nifty has topped out. So we'll track this. We'll sort of let you know when this is pushing to those zones day after day. But I think this is something which one needs to be watchful about as well. For now, I think, as has been the case, the market is indecisive in a wait-and-watch mode with a 30-odd point downtick on the SGX Nifty futures. Nigel, what are you watching?
Well, the FIs, they deceived everyone when they were selling big time. You were waiting for them to stop. They didn't stop. Now they seem to be deceiving everyone on the buy side because they're buying. They're showing us the big money, and the flows have been rock solid. Even on the F&O market, yesterday they added 13,000 contracts in the ratio of 6 longs for just one shot. And they're positioning now. The long positioning moves to around 66% odd. And it had a bit of an indication because the Nifty futures premium yesterday did move up to around that 60 points or thereabouts from around 40 points odd. The Nifty Bank, though, that's gone into a bit of a consolidation zone. Yesterday as well, it was more or less flattish. And keep in mind, the biggest component on the Nifty Bank, that's HDFC Bank, that ended high with a gain of close to around 1% odd. So it seems the Nifty Bank is not really ready as of now to go to those fresh all-time highs. Remember, the Nifty was 6% away from fresh all-time highs. The Nifty Bank was only 1.5%. Now the Nifty is 3% away, while the Nifty Bank, well, that's still 1.5% away. The indices yesterday, you saw the VIX moving up, but that's ahead of a big event. The Nifty range is at around 17,900 on the downside. And on the upside, maybe 18,300, we see some bit of resistance. And I say this because I track the options data very, very closely. And yesterday, we did see writing, whether it was either around the 18,100 put or the 18,000 put. Between both those two strikes, 1 crore shares were added, telling you that 17,900 should hold out in the near term. However, there's resistance likely at around 18,300. And I say this because 18,100 called the premiums around 120 rupees or thereabouts, and there were signs of writing out there. So I expect some kind of supply at around 18,250 to around 18,300. How do you approach trade? Well, you need to stay long, right? You can't short this market with the kind of FI flows that you're seeing and the positioning that we have. Consolidation on the Nifty, well, the bulls will take that. Post the recent run from 17,000 to around 18,000. And to approach trade today, you have a big event. Booking some profits if you're making money on the index, that could be a prudent strategy. Plenty of options in the broader market. But on the index, my take is that you take some money off the table. SGX Nifty suggests a more or less flattish start. Sonia.
Okay, yes, slightly muted over there, right? The SGX Nifty down about 30-odd points, but the Nifty is marching towards lifetime highs, record highs. So that's perhaps a given. There are a couple of big events underway. There's the FOMC meeting. There's the RBI unscheduled meeting tomorrow. There's SBI's numbers over the weekend. So lots to reckon with in this market. But first up, let's kickstart the show and give you some opinion now. Mahesh Nandurkar of Jefferies says that the FY23 Nifty earnings growth runs the risk of slipping into single digits with the consensus cuts of 2% during the results season so far, bringing YOY growth to 12%. He says consumer durables, industrial, cement, metals have seen cuts, though margin pressures are easing incrementally. On the positive side, he adds cyclicals like autos and banks have seen upgrades. Also, he says strong order booking by contractors, developers is being seen, raising the hopes of eventual private capex recovery.
Well, let's get you some money market views as well. Pramabat of Veracity says that the rupee is expected to remain in a range ahead of the all-important FOMC meet outcome. He says traders will keenly await commentary on Fed's interest rate trajectory. On relatively benign moves in dollar index and US yields, he expects the dollar-rupee pair to trade in a range of 82.6 to 82.9 for the day.
And on the bonds, Neeraj Gambhir of Axis Bank says the market has witnessed small gains led by easing global yields, but the rally stalled as RBI announced an additional MPC on the 3rd November under Section 45ZN, stirring some fears of an accompanying rate hike. For the rest of the week, he says the market will take cues from the FOMC and the RBI MPC. He expects the 10-year benchmark bond yield to trade in a range of 7.35 to 7.50% for the week.
Well, we have a lot of stocks to track for you today in our special Top 10 segment. We get to that in just a bit. For the time being, let's run you through the list. Tech Mahindra, Adani Ports, TVS Motors, Eicher Motors, Cholamandalam Investment and Macrotech Developers. They are stocks on the back of positive news flow, while Hero MotoCorp, LIC Housing Finance, Voltas and Kansai Nerolac, they are stocks that could react to negative news flow.
Okay, let's welcome in Ken